There is something very strange going on with Bitcoin right now. Hello and welcome back. As we approach the historic $100,000 level in Bitcoin, I'm starting to see strange divergences in certain price action metrics that we've been watching for a very long time. Let's jump in right now and take a look at what those are and what this might mean. So right now, at the time of recording, Bitcoin is retracing gains that it made towards the end of last week, currently at a price of $93,200. On Friday evening, on the Coinbase chart, we came tantalizingly close to that $100,000 level. We actually stayed up at those levels, or close enough to those levels, for a little while before pulling back to a low of $95,762. We then retraced some of that down move, topping out just shy of $99,000 before starting to move back down in Monday's trading session. And that puts us down around 6% from that $99,000 high. So what is happening? Well, first of all, I think it's quite clear that people are taking profits. $100,000 is obviously a very key psychological level. Bitcoin has never been worth six figures before at a price of $100,000 or just shy of. Everyone who has ever bought Bitcoin is in profit by definition because it was an all-time high. And that means people are going to want to sell, people are going to want to get out of the market and realize some of the gains that they have made. In my last video, we were talking about all-time high breaks leading to a certain type of all-time high mania where a lot of retail jumps in on leverage and a lot of retail jumps in full stop. And these guys jumping in on FOMO, jumping in on leverage with money that they don't have, often can't stomach the volatility in the market long enough to see those positions into profit and end up jumping out of those positions at the first sign of downturn, which can lead to this snowballing effect, which can lead to liquidation cascades. And we definitely saw a measure of that, particularly over the weekend. You can see here reported by Cointelegraph, but they're referencing data from CoinGlass, around $500 million worth of liquidations over the weekend, over $470 million worth to be exact. But it is absolutely not the case that the majority of this came from the Bitcoin market. We are looking at the crypto market as a whole here. BTC accounted for around $70.05 million worth of those positions, but you've also got others making up nearly $100 million worth of those liquidations. ETH, Doge, Ripple, all in the top four as well. If we take a look at the market as a whole, on bubbles, you can see pretty much everything is down, save for a few exceptions. All of this being said, despite the relative bloodbath in the markets, you can see that the crypto fear and greed index is up at a score of 82. And we've been used to these elevated prices over the last week as Bitcoin has been breaking all-time highs again and again. But what is out of place today is the fact that this elevated fear and greed index, this extreme greed in the market, is not met with an elevated long liquidation risk in the market, at least in the immediate sense. So I am currently looking at the Bitcoin exchange liquidation map over on CoinGlass, and what you can see very clearly is a massive disparity between cumulative short liquidation leverage and cumulative long liquidation leverage. And just to put numbers on it, at about $100,000 to the upside, the cumulative short liquidation risk is over $5 billion. And to the downside, the highest number that we can see is around $1.7 billion, down at a price of about $85,000. So this doesn't mean that the entire market is short, but it does mean that there is a much, much higher short liquidation risk to the upside than there is long liquidation risk to the downside. This is rare to see when the fear and greed index is so elevated as it is, because typically if the market is feeling greedy, that would lead to a lot of participants jumping in on leverage and thus elevating the long liquidation risk. Now, sure, this is about to reset in just 9 minutes time, in fact, and do expect this to cool off a little bit. But it is interesting to see these two metrics out of sync. Now, I think there's a couple of reasons for this. One of them being a lot of the leverage that was in the market that was acting upon extreme greed has been wiped out. We can see Bitcoin liquidations in the range of $145 million over the last 24 hours as per the most up-to-date data from CoinGlass. But I think it's also important to remember, particularly as we're coming into support, for every seller, there is also apparently a buyer, at least for the time being. So if we jump in and take a look at the ETF flows, you can see that the 21st of November was another $1 billion plus net inflow day. The 19th was also really, really impressive, 829 million. The 20th was big, $773 million net inflow into the spot Bitcoin ETFs. And the 22nd as well, $490 million net inflows. But we also know that there are also a whole host of corporations lining up to get exposure directly to Bitcoin. And the biggest and the most famous is, of course, Michael Saylor's MicroStrategy. MicroStrategy currently hold over 300,000 BTC, currently worth about $32 billion. And this last week, they added their biggest purchase to date, accumulating an additional 55,500 Bitcoins for around $5.4 billion. Purchased between the dates of the 18th and the 24th of November at an average price of $97,862. They were funding this by selling shares along with a note offering. MicroStrategy, nonetheless, experiencing massive upside in the stock market. And I think the sum conclusion to draw from that is people are still buying Bitcoin. Institutions are still buying Bitcoin. Corporations are still buying Bitcoin, even at these elevated prices. And any pullback like this, 6% pullback we've seen today, just presents a better opportunity to buy in the grand scheme of things. How far can we go from here? Well, we are coming into support. There's two areas that I am looking out for from here. Option one, which I would prefer, would be a really nice deep pullback down to the last sort of high volume area since we started moving up from that Trump node. In that case, I would be bidding the 76 area. Price is a little bit above from that, price is a little bit below that. If prices continue to drop, maybe we see a little relief bounce, everyone sees the bounce up, starts to get excited again, starts to jump in on leverage. We could see a return of this danger liquidation level towards the bottom of this range. Then there would be an opportunity to come through and liquidate some of those longs and get that deep pullback into liquidity down here at this volume node, this high volume area down in the mid 70s. That seems a little bit far-fetched from right now, although obviously stranger things have happened, worse things have happened in the crypto market. For the time being, I'm looking at support that we are coming into right now. This area around 90K is significant for a couple of reasons. First of all, we've got the volume profile here that I've drawn on for a fixed range since the start of the Trump news impulse move, the Trump breakout. And you can see a lot of the volume traded over the last 10 days or so has been focused around this level here. The point of control is around $91,500. You can also see that this is a resistance flipped into support. So you can see the former all-time high at around $90,000. We broke up through that, came back down again. It then served as support, and we are coming back down to that level again. So this makes sense as a place for a bounce, technically speaking. Resistance turns support. It also makes sense from the volume profile. It's where the point of control is, means that the highest amount of volume over that time period, over the last 10 days or so, has been transacted around that 90K level. It also makes sense if we look into the order book. As you can see here on Bookmap, we're looking at the multi-book here, which is aggregating across multiple different venues. There is a lot of buy-side liquidity down at $90,000. So that is the natural place for price to gravitate towards from here, and it is the natural place for a bounce if we get there. Does that mean I'm looking to bid that area? Not a terrible place to get long. You've got reasonably well-defined risk, but the problem is, although that risk is well-defined, it's kind of a long way off, because for me, I would be looking at the bottom part of this range. So that's down about $85,000. So you've got something like $5,000 range on that to be wrong. And then where are you really targeting on this to the upside? That being said, it's not a bad place to get long spot. It's not a bad place to add to the bags. But in terms of trading this short term on leverage, stuff like that, I would be looking to capitalize more on the surprise move if we get it. So kind of pending for now, kind of watching this unfold. And of course, the same thing that causes trouble to the downside, the long liquidations can be very bullish to the upside. And there are indeed a lot of short positions, a lot of short liquidation risk at prices to the upside from where we are right now. And there we have it. The Fear and Greed Index has just updated for the 24-hour period. Still in extreme greed, down a little bit from 83 where we were earlier, but 79 out of 100. Still in extreme greed. Still not a great deal of long liquidation risk right now. Institutions still buying into the end of last week, and we are coming into buy side liquidity. As always, that is not financial advice, just my opinion, just what I'm looking at. But thank you so much for watching. I really appreciate it. There is plenty more to come. Catch you in the next one. Cheers. Bye.